It's great to be back. Thanks for having me.
Absolutely, absolutely. So let's talk about, if we go back to March 24th, this is kind of intriguing, your press release on March 24th. So you've been busy. Talk to me about what's happening out here.
Yeah, so last fall we started an exploration program to test some proof of concepts. We've been studying and doing a lot of work looking at the continuity of mineralization extending northward from the Batman deposit. And the drill results we announced last fall were all very close to the Batman deposit, just looking at where the mineralization leaves the deposit area. The results that we announced on the 24th was a 500-meter step-out hole, an area that had no deep drilling. It had some historic shallow drilling. And so in an area that was on trend with the mineralization coming out, projecting north from the Batman deposit, we intersected at about 100 meters of depth an interval which is completely unknown. And it just goes to confirm our hypothesis now that the mineralization in the area around Mount Todd, specifically in the 5.4 kilometers from the pit northward to the Quigley's deposit, is much more continuous than anybody has ever thought. And the significance of this, the intercept that we drilled is actually quite minor, but geologically, what it says is that, along this 5.4 kilometers, we think there's tremendous opportunity to add resources and increase and extend the life of the Mount Todd project.
Yes. Now, as we go through this, folks, okay, this might sound a little confusing, but it's actually not if you put your head into it just a little bit. So, Fred, Mount Todd is a huge project, number one. You've been working on it for a long period of time. Even to this point, I mean, it's still a viable project before you even got to this point. Let me ask you this. When I go through this, when the amount of gold, like per ton, that you're looking at just on the drilling, I mean, that's a big number, right?
So the drill results are still, I mean, when you multiply times the potential volume, it's a tremendous amount of gold. Like you mentioned, the resource in the Batman deposit at Mount Todd right now is a little over 9 million ounces, with an average grade of 0.84 grams per ton.
Okay.
When we take, you look at what we're exploring right now, we're just concentrating on a 1 kilometer strike length north of the Batman deposit up to the Gulf targets. And if you look at something that's, a kilometer in length, 150 meters in width, a couple hundred meters in depth, there's a potential there, and I don't know that that's the shape of this target or that we're chasing, but the potential is that this could literally be an additional several million ounces of gold added to the resource inventory at Mount Todd, with time and with a considerable amount of additional drilling.
Sure. And the aspect, folks, what ends up happening is that when you're an exploration company, of course, is that the bottom line is it takes money to drill holes. The more land you have that actually has something on it is a very large potential. So this is pretty impressive. When I was reading this, Fred, it was like, okay, man, this is pretty cool. The 1.23 per ton. I says, okay, this is pretty impressive. So in the aspect of going forward now, I believe that you're going to spend, a little bit more money to drill actually even more holes. Is that correct?
Yeah, absolutely, Tom. We're so encouraged by the results of that last hole that we've added a second drill rig, and we've committed to another 3,000 meters of drilling, and we'll follow those results, and if the results continue to be favorable, we'll extend the present program.
Nice. Now let's talk about Vista in general. Last time that I had you on, the bottom line is that you've been at this project for a long period of time, basically looking for a partner so that your risk value goes down. Can you talk to us a little bit about that, whether it's a year, 2 years, going forward?
Yeah, COVID has finally caught up with us. I'm afraid that the process of finding a partner is taking longer than what we'd anticipated, in big part because countries like Australia have not yet opened their borders for
Okay.
international.
Yeah.
And so we're not able to get people there to do site visits. Where we thought that sometime about this time, if we'd have talked last fall, I'd have said, well, somewhere April or May, we think we'll be in a position to announce a transaction. And now I think it'll be the end of this year at the earliest, just simply because
Sure.
of the logistics and whatnot. But there's still several companies that are active. They're in the data room. They're looking at data. They're watching the drill results very closely. And there's some other things that are ongoing that continue to attract their interest. We have been working on our mine management plan, the mine operating permit, and we believe that we're now within it's imminent. I know that the review of the permit has been completed. Our lawyers have been working with the government's lawyers on the final wording of the approval document. We think that we're within a week or two of having that approval in hand, which means that we'll then have all of the major permits for the project, and that's a huge plus for a potential partner.
Sure. And, talk to me a bit about just the overall, when you take a look at Barrick Gold, Mark, speaks a lot out there in the aspect of, keeping costs down. He's going up to Donlin Creek now, which is amazing because, I'm familiar with that from years ago. He's been out there forever. So do you think that, the bottom line is that these minerals are going to have to be replaced. Every year that we keep taking dirt out of the ground and ore out of the ground, bottom line, larger companies, they have to replace their mineralization, right?
Well, that's absolutely right. Every year that goes by without successful exploration, a producing company finds themselves, with less gold in reserves or in inventory, if we could talk about it that way.
Yes.
And God, from that perspective, offers a tremendous opportunity. The reserves of the project are 5.85 million ounces. As the project is designed today, it'll produce, on average, over the first 5 years, just under 500,000 ounces of gold per year. The cash costs are estimated to be $575 an ounce during that period of time. So this fits very well into the potential portfolio of a senior producer.
Sure. Well, listen, it's always a pleasure. I'm so impressed